Digital auditing and assurance. Digital audit. What do you mean by digital audit? Digital audit is placing assurance on effectiveness of internal control systems implemented in an organization. Key features of digital audit. It encourages auditee to embrace latest technological advancements and to stay updated in constantly evolving environment. It improves quality of opinion. This leads to more reliable audit report. It leads to savings in time, cost, and human efforts, which can be utilized towards more productive tasks. It will help create a future for digital strategy and adapting new technologies. Adopting new technologies. It can help auditee to make informed decisions. What are the advantages of digital audit? Enhanced effectiveness and efficiency, better audit quality, lower cost, better analytics, improved risk assessment are the advantages of digital audit. Next, what are the considerations and challenges in digital audit? Evaluating business benefits. Organization want to achieve with automation. Think people first and do not underestimate change is difficult. Target the right process. This is the key for successful automation. Automation is not a standalone solution and should be part of a broader digitalization strategy. Ensure that process works and it is standardized before automating. Boards do not easily adapt to process change. Automation introduces new challenges for organization. Don't forget about the governance and data security in the risk framework. Next, stages involved in digital audit. There are three stages involved in digital audit: understand, identify, assess. Next, auditing digitally. Auditing digitally means using technology advancements for conducting effective and efficient audit. Key features are advantages of auditing digitally: improved quality of audit, decreasing human dependency, increases transparency, automation and ease, improved efficiency, better risk assessment. Considerations in auditing digitally. There are few questions that is important to ask and answer at all stages of a tech journey. First question: what problems are you trying to solve? Which technology can help you? How will you upskill your people to make best use of the technology available? A range of automated solutions. Some of the techniques using some of the techniques are using robotics and automation for data gathering activities, use of data analytics for planning and budgeting, and reporting by dashboards. Next, understand the IT environment. Auditors' understanding of automated environment should include following: applications that are being used by the company, details of IT infrastructure components for each application, organization structure and governance, policies, procedures, and process followed, IT risks and controls. Key considerations are areas for auditor to understand IT environment. There are five key considerations or areas for auditor to understand IT environment. First one, understand flow of transaction. Second one, identification of significant systems. Third one, identification of manual and automated controls. Fourth one, identification of technologies used. Fifth one, assessing complexity of IT environment. First one, understand flow of transaction. Auditors' understanding of IT environment may focus on identifying and understanding nature and number of specific IT applications that are relevant to flow of transaction in an information system. Second, identification of significant systems. Auditor may identify IT applications and supporting IT infrastructure concurrently with the auditor's understanding of how information flows through entities information system. Third, identification of manual and automated controls. Entity system of internal control contains manual and automated elements. Identification of both are relevant to auditors' identification and assessment of risk of material misstatements. ROMM. Fourth, identification of technologies used. There is a need to understand the emerging technologies implemented and consider whether there are risks arising from their use. Some examples of emerging technologies are blockchain, robotics, artificial intelligence, Internet of Things, biometrics, drone, etc. Fifth one, assessing complexity of IT environment. Not all applications have same level of complexity. Level of complexity for individual characteristics differ across applications. Next, identifying the risk arising from use of IT. Risks arising from use of IT. Unauthorized access to data or improper changes to data. Possibility of IT personnel gaining extra access. Unauthorized changes to data. Unauthorized changes to IT applications or other aspects of IT environment. Failure to make necessary update to IT applications or other aspects of IT environment, inappropriate manual intervention, data loss or data corruption, risk of system downtime, IT dependencies. IT dependencies are created when IT is used to initiate, authorize, record, process, or report transactions or other financial data for inclusion in financial statements. Five types of IT dependencies. There are five types of IT dependencies. First one, automated controls. Second, reports. Third, calculations. Fourth, security. Fifth, interfaces. Fifth, interfaces. First one, automated controls. Automated controls are designed into IT environment to enforce business rules. For example, purchase order approval via workflow. Second, report. System generated reports are information generated by IT systems. These reports are used in performance reviews, selecting items for testing, or performing analytical procedures. Third one, calculations. Calculations are accounting procedures that are performed by an IT system instead of a person. For example, system will apply straight line depreciation formula to calculate depreciation of an asset. Fourth one, security. Security, including segregation of duties, is enabled by IT environment to restrict access to information and to determine separation of rules, separation of roles and responsibilities. Interfaces. Interfaces are programmed logic that transfer data from one IT system to another. Next, assessing cyber risks. Cyber attacks and its types. Cyber attack is an attempt to gain unauthorized access to a computing system or network with intent to damage, steal, expose, alter, disable, or destroy data. Most common type of cyber attacks are first one, malware. Malware are malicious software is any program or code that is created with intent to do harm to a computer, network, or server. Its subsets are ransomware, fileless malware, Trojan, and mobile malware. Ransomware. In a ransomware attack, adversary encrypts victim's data and offers dis- de- decryption key in exchange for payment. Second, malware. Fileless malware is a type of malicious activity that uses native legitimate tools built into system to execute cyber attack. Trojan. Trojan is malware that appears to be legitimate software disguised as harmless files like free downloads. Mobile malware. Mobile malware is any type of malware designed to target mobile devices. Next, denial of service attacks. DOS attacks. DOS attack is a malicious targeted attack that floods a network with false request to disrupt business operations. In DOS attack, users are unable to perform routine tasks such as accessing emails, websites, or online accounts. Next, phishing. Phishing is a type of cyber attack that uses email, SMS, phone, or social media to entice a victim to share sensitive information such as passwords or to download a malicious file that will install virus on their computer or phone. Following are the types of phishings, spear phishing, whaling, smishing, wishing. Spear phishing. Spear phishing is a type of phishing attack that target specific individuals or organizations, typically through malicious emails. Whaling. Whaling attack is a type of social engineering attack, specifically targeting senior employees with purpose of stealing money or information. Smishing. Smishing is a type of fraudulent practice of sending text messages pretending from reputable companies to induce individuals to reveal personal information. Wishing, wishing or is voice phishing is fraudulent use of calls and voice messages pretending from reputable companies to convince individuals to reveal private information. Next, spoofing. Spoofing is a technique through which a cyber criminal disguises themselves as a known or trusted source. There are two types of spoofing: domain spoofing, email spoofing. Domain spoofing. Domain spoofing is a form of phishing where an attacker impersonates a known business with a fake website or domain to fool people into trusting them. Email spoofing. Email spoofing is a type of cyber attack that targets businesses by using emails with forged sender addresses. Sender addresses. Identity based attacks. When valid user credentials have been compromised and adversary is pretend to be that user. For example, people often use same user ID and password across multiple accounts. Therefore, possessing credentials for one account may be able to grant access to other unrelated accounts. Next, insider threats. When current or former employees pose danger to organization because they have direct access to company network, sensitive data, or other information. Next, DNS tunneling. DNS tunneling is a type of cyber attack that leverages domain name system DNS queries to bypass traditional security measures and transmit data within the network. IoT based attacks. IoT attack is any cyber attack that targets an Internet of Things IoT device or network. Stages of cyber risks. There are three stages of cyber risk. Stage number one, assessing the cyber risk. No organization is completely immune to cyber risk. Every organization should consider at least common threats, ransomware, disabling their organization, common criminals using email phishing and hacks for fraud and theft, insiders committing malicious activities or accidental activities. Second stage, impact of cyber risk. Cyber risks are not an issue of IT alone. It is a business risk and has an effect on whole business organization. It leads to many consequences, which are regulatory cost, business interruptions, causing an operational challenge for organization, data loss, reputational loss and litigation, intellectual property theft, incident response cost for investigations and remediations, breach of privacy, fines and penalties. Stage 3, managing the cyber risk. Strategic approach to cyber risk management can help organization to gain holistic understanding of cyber risks and threats, assess existing cyber security program against regulatory requirements, align cyber security with strategic objectives. Cyber security framework. It includes how management is identifying risk, protecting and safeguarding its assets from risk, management's preparedness to detect attacks, anomalies, and responsiveness to adverse event. Cyber risk framework involves following steps: identify the risk, protect the risk, detect the risk, respond to the risk, recover from the risk. First, identify, protect, detect, respond, recover. Control considerations for cyber risks. There are three control considerations for cyber risks: controls around vendor setup and modifications, controls around electronic transfer of funds, controls around patch management. Next, remote audit or virtual audit. A remote audit or virtual audit is when auditor uses online or electronic means to conduct audit. It could be partially or completely virtual. What are the advantages of remote audit? Advantages of remote audit: cost and time effective, no travel time and travel cost involved, time required to gather evidence can spread over several weeks instead of small period, comfort and flexibility to audit team as they would be working from home environment. Auditor can get first-hand evidence directly from IT system, widens selection of auditors from a global network of experts. What are the disadvantages of remote audit or virtual audit? Due to network issues, interviews and meetings can be interrupted. opportunity to present doctored documents and to omit relevant information is increased. No ability to visualize facility culture of organization and body language of auditors. Time zone issues could also affect efficiency. Remote access to sensitive IT systems may not be allowed. Cultural challenges for auditor. Audit procedures like physical verification of assets and stock taking cannot be performed. Next, data analytics. Meaning of data analytics. Generating and preparing meaningful information from raw system data using process, tools, and techniques is known as data analytics. Audit analytics or audit data analytics involves analyzing large set of data to find actionable insights, trends, draw conclusions, and for informed decision making. Use of audit analytics enables greater efficiencies and more accurate findings from review process. Data analytics methods used in audit are known as computer assisted auditing techniques or CATs. It involves use of multiple data analytical tools or visualization tools that helps auditor to deep dive into problem statement and hence increase the audit quality. Some popular tools used across the industry as a part of computer assisted auditing techniques CATs are: first one, audit command language ACL. ACL Analytics is a data extraction and analysis software used for fraud detection and prevention. It samples large data sets to find irregularities or patterns in transactions that could initiate control weaknesses that could indicate control weaknesses or a fraud. Next, Alteryx. Alteryx is used to consolidate financial or operational data to assess controls. It can also be used to automate set procedures that are performed periodically, like reconciliations, consolidations, system integrations, continuous audits, etc. Next, Power Business Intelligence, Power BI. Power Business Intelligence is a platform that provides non technical business users with tools for aggregating, analyzing, visualizing, and sharing data. Such visualization tools can be used for reporting purpose in an interactive dashboard to higher management. Next, Caseware. Caseware is a data analysis software and provides tools that helps in conducting audit and assurance engagements quickly, accurately, and consistently. It shares analytical insights which help in taking better informed decisions. It helps in streamlining process and eliminating the routine tasks. Next, automated tools in audit. Enterprises are adapting emerging technologies to create synergies and harness latest technologies. Examples of automated tools used as a part of emerging technologies. First one, Internet of Things, IoT. Internet of Things is a concept of connecting any device, cell phones, coffee makers, washing machines, and so on, to the internet. Key components of IoT are data collection, analytics, connectivity, people, and process. IoT not only changes the business model but also affects the strategic objectives of organization. Audit implications. A shift to connected devices and systems may result in auditors not being able to rely only on manual controls. Instead, auditor may need to scope new systems into their audit. Audit firms may need to train and upskill auditors to evaluate design and operating effectiveness of automated controls. Common risks of Internet of Things. Key areas associated with Internet of Things are device hacking, hijacking, data siphoning, denial of service attacks, data breaches, and device theft. Next, artificial intelligence. What do you mean by artificial intelligence? Artificial intelligence refers to a system or a machine that can think and learn. Artificial intelligence systems utilize data analysis and algorithms to make decisions based on predictive methods. Audit implications. Given the invisible nature of algorithms, audits must focus on logical flow of processes. A review of artificial intelligence should ascertain whether unintended bias has been added to algorithms. Auditors should assess effectiveness of algorithms and whether their output is reviewed and approved. Common risks of artificial intelligence. Artificial intelligence comes with a list of risks. Key risks associated with artificial intelligence are security, inappropriate configuration, and data privacy. Next, blockchain. Blockchain. What do you mean by blockchain? Blockchain is based on a decentralized and distributed ledger that is secured through encryption. Each transaction is validated by blockchain participants, creating a block of information that is distributed to all participants. All blocks are sequenced so that any modification or deletion of block disqualifies the information. Audit implications. Auditors should consider appropriate governance and security around the transactions. As blockchain interacts with legacy systems and business partners, concerns related to insecure application program interfaces, that is APS, data confidentiality, and privacy cannot be ignored. Auditors must be able to determine whether the data put on blockchain will expose enterprise to liability for non-compliance with laws and regulations. Common risks of blockchain technology. Strengths of a blockchain can also be its weaknesses. Inability to reverse transactions and to access access data without required keys make the system secure, but also mean that organizations need specific protocols and management processes to ensure that they are not locked out and have clear contingency plans. Operating through network nodes could also expose organization to cyber attacks and data hacks. So security issues are important. Next, non-fungible token NFT. NFT means something is unique and cannot be replaced. NFTs are digital assets. Example photos, videos, artwork, sports collectibles, etc. NFTs are tokens used to represent ownership of unique items. They are secured by blockchain and can only have one official owner at a time. Key features of NFT: digital asset, unique exchange. NFT exchanges takes place with cryptocurrencies on specialist sites. Challenges of NFT. NFT has its own challenges like ownership and copyright concerns, security risks, market is not that wide, online frauds, etc. Next, robotic process automation, RPA. What do you mean by robotic process automation, RPA? RPA is the automation of repetitive process performed by users. It is a software technology that emulate human actions interacting with digital systems. RPA software bots can interact with any application the same way people do, except that RPA bots can operate non-stop, much faster, and with 100% reliability and precision. Audit implications. It is of utmost importance for auditor to understand RPA process, which include data extraction, aggregation, sanitization, and cleansing. Otherwise, they would not they will not be they will not be in a position to initiate audit. Auditors must have an understanding of the tools used to develop and maintain RPA. Common risks of RPS: operational and execution risks, change management risks, RPS strategy risks. Next, control considerations of auditing digitally. Some examples of technology risks of digital systems are reliance on system or programs that are inaccurately processing data or processing inaccurate data, unauthorized access to data, possibility of IT personnel gaining extra access, unauthorized changes to data, unauthorized changes to systems or programs, failure to make changes to systems or programs, inappropriate manual intervention, potential loss of data, or inability to access data. Auditors should consider following control considerations while assessing technology risks. Auditors should gain a holistic understanding of changes in industry and IT environment to effectively evaluate management processes for initiating, processing, and recording transactions, and then design appropriate auditing procedures. Auditors should consider risks resulting from implementation of new technologies and how those risks may differ from those that arise from traditional systems. Auditors should consider whether digital upskilling or specialists are necessary to determine impact of new technologies and to assist in risk assessment and understanding of the design, implementation, and operating effectiveness of the controls. Example, cyber security control experts, IT specialists in team, etc. Next concept, next generation audit. Next generation audit is human led, tech powered, and data driven. It is based on combining emerging technologies to redefine how audits are performed. Examples of emerging technologies available for next generation audit. First one, drone technology. Using drone technology in remote locations for stock counts, drones have great, great payload capacity for carrying sensors and cameras. Thus, they can photograph and physically examine count of large quantities of fixed assets and inventory. Second, augmented reality (AR). Augmented reality, that is AR technology, allows users to view the real world environment with augmented added elements generated by digital devices. One famous example was Pokemon Go game. Next, virtual reality (VR). VR replaces real world entirely with a simulated environment created through digitally generated images, sounds, touch, and smell. Using special equipment, user can explore simulate experiences such as flying or skydiving. Next, metaverse. Metaverse is emerging 3D digital space that uses augmented reality and virtual reality and other advanced internet technologies to allow people to have lifelike personal and business experiences online. Potential application of metaverse in financial domain are virtual business and transactions, digital asset management, virtual financial education and training, virtual meetings and conferences, data visualization and analytics. Common risks associated. These technologies also comes with challenges such as public safety, cyber security, data privacy, data protection, lack of standards, and technical challenges. It also raises questions about taxation, jurisdiction, and customer protection. Regulators and auditors have to think of controls around privacy, data security, governance to make it more regulated.